Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, September 20th, 2016. In this video, we'll take a look at the cannabis stocks, the marijuana stocks. For those of you that have been on the site for a while, especially in the trading room, that's usually where I post these ideas. These are, a lot of these they're all low price stocks. Some of these are actually penny stocks. I'm typically not a penny stock trader. I typically shy away from those. But as I've mentioned before in the trading room, a lot of these stocks trade very well to the technicals. So let me just get the disclaimers out. These are very aggressive, high-risk trades. Anytime you trade a penny stock or even a low-price stock, any stock above $5, there's typically a elevated degree of risk on those. But again, so for those, those of you who know what you're doing, or if you're willing to take a small enough position size, I cannot emphasize that enough. The suggested beta adjustment, which is really a term that I use for adjusting my position size to account for above average or even below average risk. That should be about, on these things, zero point 0.1. What does that mean, 0.1? Well, beta of 1 is the stock market, the market as a whole. Let's say you're trading the SPY, the S&P 500 tracking ETF, and you typically, put in 10,000 in a position, then you put in 10,000 in the SPY. It's going to go up and down in line with the market. If you trade these stocks and the beta adjustment's 1, at least in my book it is, you instead of putting 10,000, you might only put $1,000. Now, if you trade in $100,000 lots, your position size, you probably can't put in 10,000 in these. You'll move the market. They're too small. Some of these. You can look at the stock. You can look at liquidity. Look at the volume, the daily volume. You need to know what you're doing. Use limit orders to buy and sell. Do not use market orders on penny stocks, especially when you notice wide spreads. Sometimes when the traders are in them, there's a lot of volume and there's orders on both sides. So you might be able to get away with a market order on a higher price stock. But for the most part, and especially on penny stocks, most brokers won't even allow you to put a market order. So if you don't know what I'm talking about, look into that, do research, and most importantly, stay away from aggressive speculative trades if it's not doesn't fit your risk profile or your trading objectives and all that good stuff. All right, so let's get we got the disclaimers out of the way again. With the above average return certainly comes above average risk. This is ACBFF. This is an active trade, a long-term trade, which means basically an investment money, tucking this one away, at least for the time being. And I'll periodically, soon I'll put an update in raise stops. Right now I'm watching the stock. It's been flirting around with it came as high as 99 cents today. And as I mentioned, if and when it crosses above the $1 level, which I suspect it probably will soon, that'll be a good thing for the stock. It'll pick it up on some additional stock scanners and other things. So again, this one I have done my due diligence on to an extent. And like I mentioned, this is a Canadian company selling medical marijuana. They have a legitimate business model. They even have the first the first app for phones that you can go online and shop their different cannabis products. So this one, as I mentioned earlier, has a level. Let's take a look at a near-term chart. I posted in the trading room earlier today and then an update on the front page. See this 95 level, that's where the stock has been tapping along for the last few days, and it broke above that level today, which is bullish. This was sort of like an ascending triangle pattern, if you will, right here. And it broke out, and that's bullish as long as that level holds, so keep an eye on it. And again, that big $1 level, like I said, I want to see it maintain that level if it breaks above it, not just a brief spike. The longer it trades above the $1 level, I think the better off the stock will be. There is some potential divergence. Nothing goes up straight forever, although these things can. Just one quick thing, if you're in these are momentum plays. If these stocks go up 50, even 100%, that's run of the mill for a regular rally. These things can go up 200-300% sometimes before a healthy pullback. And this divergence, by the way, is not confirmed. At this point, I really, on the long-term trade, I'll post separate updates on that. I just wanted to point it out. It's still, as much as it's run up, if you follow this one, we've traded it twice on swing trades. We traded it out of here, caught this initial rip, and then bought it on the pullback there, caught another rip up and hit our price target again. And but the long-term trade, again, we're tucking that one away. I just wanted to point out that I still like it. It's still, it's almost twice where it was when we first bought it. But I expect this one over time can easily go up in the, $2, $3, $4, $5 plus range. If it has a sound business model and continues to grow. But everything I've seen so far supports it. A lot of volume coming into this stock, just very bullish price action so far. And again, as of today, having it taken out that level, that certainly makes it, an objective add-on for anybody wanting to scale into the stock. There it is, that 95-cent level. And there's a trend line that if you wanted to buy into this, if you're trading around this stock, you could buy that breakout today anywhere in here, put a stop loss a little bit below that level. You could also put you can also see some horizontal support there around the 90-cent level. You go down the line, you can see support here. This is really solid support. There's a lot of trading went there. So at this point, it would be healthy to see the stock remain above 84, 85, that level, and not go much below that. All right, let's look at a couple more because there's certainly some other trading ops in the sector. And these, again, aren't in any particular order that I'm going through, just some of the ones that stand out to me. This is CANN, General Cannabis Corp. And, as you can see this, here's a downtrend line with a bullish falling wedge. You can see it confirmed with divergence. The stock broke out at that point and was good for a run of about 200, almost 280%. Yeah, about 280% right there. Pulled back, and, the pullback was a drop of 75%. So if these numbers don't put into perspective how much you can gain or lose in relatively short order on these stocks, then I don't think anything does. So that's why you adjust your position size properly, and just keep in mind that with stops, I have the luxury of trading in front of my computer. If you put a stop loss order in there, first of all, you need to do a stop limit. You can't do a stop loss order. Stop loss orders convert to a market order once that stop price is hit. So you need to use a stop limit. That can be bypassed. Gets a little tricky. So I watch these. I have the luxury of trading in front of the PC. But if you don't, and if you are going to trade these, you'll be forced to use a stop limit. So at this time, let's take a look here. The most recent bullish event was this breakout of this downtrend line. You can see a downtrend line here, similar to this other one. I had some reaction highs here that overshot the trend line. These are called momentum overshoots, and so this is where that trend line normalized. So prices, you can see, captures a lot of reaction highs here. And we broke out, and like I said, these trade well to the technicals. You can see upon the breakout, see the big green candlestick? Just like this big green candlestick, that confirms that traders are watching these. That confirms that was a key technical level, because when that level was, when the stock broke out, it didn't just limp through like these other candlesticks. It had one big green impulsive candlestick on high volume. You can see the volume bars down below, just as you can see the volume bars down below here, confirming a breakout. These are things you want to look for. That tells you the momentum players are in the stock. It tells you they're watching it. And, from that point, and this one's been pointed out several times in the trading room, it's already gained roughly 40% in just the last couple weeks. And it's coming up on the first target I have here. 120 is the actual resistance level. I usually take profits before then. And on some of these, I'll let them. There's a couple I've put away longer term, but for the most part, I like to trade these, and that is a level. What I'm getting at here with a resistance, or the first target at 120 and the stock already at 112, it's a little late to chase that one now. But if it does take that level out, that is resistance. You can see the reaction here. You see reactions here, here. So if 120 is taken out with conviction, that stock, that opens the door for a move up. There's minor resistance there at about 143 almost. Then that $2 level. And if and when that goes, I would expect, I see some minor resistance in between here around 277, but I think that thing will open the door for a move up to the $4 area. And first things first, and that's that 120 area. So if you're in that one, that's your obviously your first target. Next target could be right there, depending on how much you want to hold out for. And ultimately, I think this one has a chance, as long as the momentum the players stay in the sector, to head up, work its way up to the $2 level in the relative near term here. One other thing to point out, the reason I'm doing this video today, as I mentioned, I'm not doing a lot of trading and other things because of the FOMC meeting. This market's just going to grind back and forth. Good luck, more power to you if you're able to day trade or successfully swing trade. I'm just kind of sitting tight on what I have. But these stocks, what I like about the cannabis sector, and typically these very small, penny caps or low price stocks like this, is they march to their own drumbeat completely. They do not trade. They don't have much of a correlation, if any, with the broad market. Meaning the broad market can be selling off, and I've seen that many times where the broad market's in a downtrend and these things are in their own little bull market or rally mode. And I've seen other times where the market's rallying and these things can't catch a bid to save their life. But it's not an inverse correlation. It's just a non-correlation. So I'm okay, during weeks, nobody cares about what the Fed's going to do when it comes to these penny stocks. It's not really going to impact that like it might a Walmart or a General Electric or anything else in the broad market. All right, we'll move a little faster through here. MJNA, medical marijuana. Again, you can see nice downtrend line. You see the reactions, breakout, and then big move up. And that from the breakout point, that was about a 70% rally. Stock came back. It has support. These two lines here are both support levels. This one probably being the most important one at this point in time. We'll highlight that and mark it about around the 4 cent level, and it's coming up on support now. So it's coming up on support. Looks like the PPO is starting to turn up. It hasn't done so yet, still pointing lower, but you want to watch for that. And you could take a shot here. Now the thing about these stocks is they can be dead money for a long time. You want to play these with the momentum traders when the momentum's there. When the momentum's out of the stocks, they can be dead money or drift lower for a long time. So while you certainly could take a shot here at the 4 cent level with a stop not too far below, the next buy signal for this stock will be a break above this downtrend line, just like it was here. Broke above the downtrend line, looked like it limped around for a couple days on support, and then exploded to the upside. So another break of this, and this seems to be the area right here where it's finding resistance recently, is right around the upper end of this range here. I'll give you a number on that. Let's do that. That is roughly, we have that previous reaction high. Let me mark this one. About the 6 cent level. So from 4 cents to 6 cents. That's a 50% return. Not bad if you get it. And then if and when that level is cleared, you can see a reaction back here as well. That validates that as a pretty key level. If and when that 6 cent level is taken out, this would be minor resistance, and then this would be the next target here. And in fact, this one has potential to go even higher. So those are your, again, potential longer term levels. Just depends how you want to trade these, whether you want to just do the quick hit and run, get in and out. CBIS, again, use all these downtrend lines, breakouts. Each breakout is impulsive. You see the impulsive buying. You see the increased volume down below, like clockwork. You can draw these downtrend lines, and the stock explodes when it takes them out. Big gains. Then not so much on that last breakout, but still a decent move. I mean, you could have traded it, and it broke out, back tested, and then moved up. So again, it just behaves well off the technicals. Here's an uptrend line to watch. Right now, the stock is struggling with that. It's really pinned right on that uptrend line. So the momentum's not there. You could take a position here at this point. In anticipation of a breakout with a stop not too far below. May prove to be dead money, it may not. When these things move, they move fast. Next target, if and when this minor downtrend line breaks out, would be right around here, you have intersecting resistance. You have this horizontal resistance level here. You can see the reactions to the left off to the chart here. And you can see the downtrend line coming in off the highs, and that might even go back a while. Yeah, I don't have it drawn on this 2-day period chart. So that would be the target, and that would, from where it's at right now, that's good for about a 41% gain. So using an RR of 3 to 1 or better, maybe you want to use a RR 4 to 1 on this one, you could give yourself about a 10% stop loss if you did take a position here. Or like I said, you can wait till that breaks to either take a position or maybe add to a starter position that you've taken here. CGRW Canagrow Holdings, this horizontal line right here at 72 cents. That's a key level. We have reactions back here. You can see reactions from below. And recently that's been the ceiling on this stock. You can see here it's tapping on that level. I had a minor trend line here. Let's just move that one away. So that's your level. It's got some work to do, but you could set a price alert. I might already have one, but if not, I'll set an alert right there for a break above 72, which opens the door for a move up to either this previous reaction high or that other reaction high around the $1 level. And again, like I mentioned on that ACBFF, $1 level, it's a key level. You can see this stock challenged it once, tried to get above it, had a brief intraday break. You can see there that little wick that goes above the $1 level. That's what I'm talking about on ACBFF. I want to see it not only get above $1, I want to see it hold and close above $1. And the more consecutive days that it can do that, the better off that stock will be. So right now, that's what it's doing. ACBFF, as I'm talking, is it hit a high of 99 cents today, and it's trading right about that right now. All right, so those are some levels to watch there. You could probably also do this downtrend line. Yeah, we could certainly look at that downtrend line as something to watch right there. All right, GRNH, Green Grow Technologies, nice downtrend line. You can see that here was a large, primary downtrend line that went back, even goes back to the left of this chart. This is a 2-year chart. Broke out, bull flag, and again, my point being, I know I'm harping on the same thing here, just how well they trade to the technicals. So there's an impulsive move up. Here's a flagpole. There's a bull flag, and this is the measured target. If you look up bull flag, you can search it if you're not familiar with that term. This is what you'll get. You take the flagpole, which is the distance leading up to the flag. You place the flagpole at the top of the bull flag pattern, and then you place that flagpole at the bottom, and you can see just how well, almost to the penny here, how well that played out. And then you got out because you hit your measured target, and the stock turned around and fell. So even if you weren't in it at the bottom, even if you took the breakout here, or even let's just say you waited for this bull flag, you missed the breakout, you saw the bull flag form, and you went long right there, that was good for about a 200% gain. And then if you didn't get out, if you got greedy and didn't take your profits, these things turn on a dime. That's why I said you have to, have some experience with trading to game these things successfully. But it turned around and dropped, almost 65% or so. Where are we at now? Well, we're looking at a pretty well-defined downtrend line that comes in, and I like to see this. I like when I see a downtrend line that comes in with horizontal price resistance. So we have price resistance at 5 cents and the downtrend line. So break above 5. Now, to be safe, when I see two resistance levels in close proximity, I wait until the latter of the two are taken out. In other words, if it breaks above this downtrend line, there's just a little room to go up to that 5 cent level. It doesn't make sense to me to take a stock long right in front of resistance, even if the first level is taken out, because although some eyes are watching this line, other eyes are watching this line. So 5 cents is taken out. That would open the door for a quick move up to the 6 cent level, which is a 20% gain, and these are additional price targets. And it's hard to say, ultimately the most significant resistance right now on this chart is that previous reaction high around 11.8 cents. And that, certainly could go up there. Again, how much of that, it largely depends if the momentum is still in the sector. As I'm going through these charts, you can see that some of these stocks have been moving recently, and well, we almost had divergence there. I was drawing the bullish divergence on the PPO Let's delete that line and show you what I'm looking at here. So you had this pattern right here. So that one looks good for a breakout. I'm on watch for a breakout. Let me make sure I have a price alert over 5 cents a share. All right, CCAN. This one's very thin. When you see these candlesticks like this that look kind of choppy, that just shows thin trading. Now you can see that when the volume comes in, these candlesticks normalize a little bit better. Not one of my favorites, I'll just point that out, but there is a downtrend to watch. You know, that last downtrend line right here was taken out. You can see the impulsive buying. The buyers stepped in. Traders are watching these. They're watching these downtrend lines. So a break of this downtrend line would propel that stock. I should add a first target would be right here. I can certainly see some resistance there around 104 and then 142 and a half. All right, that's CCAN. Next one up is Full, F-U-L-L, Full Circle Capital. And this one's actually asset management. I've mentioned this before. Some of the stocks in my cannabis watch list are related to the cannabis industry, but they don't necessarily grow cannabis and sell cannabis. They this one's a financing company. I believe they probably finance a lot of the smaller startups and venture companies, you know, that are selling cannabis and growing cannabis or involved in cannabis some one way or another. So not a direct play, more of an indirect play. So just keep that in mind. But either way, there's a level at 274. You can see this stock is challenged many times. So we had a false breakout there, failed, and prices have remained under that level. So you could set a price alert above 274, and we could move up to any or all of these potential targets there. CBDS, Cannabis Sativa, is an uptrend line to watch. Not one of my favorites, just this is a primary downtrend line that the stock may eventually work its way up to. It's in an uptrend now, but you can see here is a downtrend line. Look at that breakout. Just look at that move from there to there. That was about a 630% run in just a couple weeks. So again, you can have explosive gains, and you can have explosive losses as well if if you put too much money in these, or you just put the money away and hope that they'll come back. They don't always come back, guys, these penny stocks, so be careful. And two more to go. AERO. This one has been in a strong uptrend. The stock is just, this year alone, the stock has gained about 200 and 300%. Looks to me at this point in time, it's forming a large bearish rising wedge pattern. So I wouldn't be chasing this one at this point. It might want to work its way up a little more into this wedge, but I can see negative divergence on the PPO there, and that uptrend line to watch. There's support below, and there's quite a few support levels. I don't short these things. You can be destroyed if you're on the wrong side of a short trade. I'd rather go long where my loss is quantified. If I put a small amount of money, whatever I put into these stocks, I say realistically, if it really comes against me in one day and I, gaps down or has a sharp move down, maybe I lose 30-40% of my money before I can stop out. And as long as I'm okay with the dollar amount on that 30 or 40% loss, I'm fine trading these. You have to accept a 30-40% loss if you're shooting for a 2, 3, 400% return on some of these stocks. It's all about that RR ratio, risk to reward ratio. And the last one, I'm not crazy about it. Chart's a little messy. There's an uptrend line here. It had a few brief spikes below. It's broken down below there. This is support. I really can't make a case to go long or short this one right here. It probably, might be interested if it gets down to this level. And again, just watching the momentum in the sector. As I wrapped that up, that was at the bottom of the watch list, at least the ones I had flagged that I wanted to cover in the video. There's some I didn't cover, but I think I missed a few at the top. And forgive me if I've gone over these. I'm pretty sure I didn't. I think I started out on this one here, which has now already hit that $1.20 target, CANN. And I already talked on ACBFF. A couple more to make mention on. They're certainly worth pointing out. CVSI, if I didn't point that out. this nice downtrend line. We have really a symmetrical triangle here formed by this uptrend line, this downtrend line. It's pinching between the two, right at support now. You can take a more aggressive long here at support, or wait for the more probable entry, higher probability entry, I should say, and that's a breakout of this downtrend line. And this one, any or all of these are targets. Ultimately, I think that one can work its way up to at least this 53.6 cent level. And Kara, I mentioned in the trading room yesterday. I knew at least one member took it. This one isn't a pure play. This is actually a biotech company, a smaller biotech company, and I did do a little due diligence on this one. I like it. They have several drugs in clinical trials right now, and some of those are opiate. They bind to opiate receptors, and they have a couple, or at least one drug now that in preclinical studies, I believe, that it uses a cannabinoid. It binds to cannabinoid receptors, so it's a marijuana-based painkiller. And the company's goal really is to come out with some effective painkillers that have very low addiction rates. That's the problem with the most effective painkillers on the market today. They're typically your opiates, and they have a high rate of or a high propensity or risk of addiction. So anyways, this one's promising, and most importantly, first and foremost, every company has a story. There's 1,001 story stocks out there, but I like this one because I had this basing pattern that I've been watching here. You can see that starts really with this large gap back down here. We did bust above it at this point, and again, I already went over this one, I think in the trade. Yeah, I did yesterday in the video. I sure did. So you can check out that video. I went into this stock in more detail, but I like, so far it's following up. I see the breakout yesterday right here. The breakout was confirmed on above average volume, which is what I like to see, and so far so good. We're seeing some good volume coming into the stock today. Following up, it's taken out yesterday's highs. Everything I like to see in a breakout. And again, this one flies underneath the radar. I don't think it has a high correlation to the biotech sector. It may not even be in any of the biotech ETFs, which would be my preference. Because if you have a biotech in the biotech ETFs, when the sector gets sold, everyone's selling the ETFs. They have to meet those redemptions. They sell the stocks that they hold. So this one, again, it may be an XBI or IBB or any of those. I'd have to check. But either way, looks good. And that's my first target up there. And I think this one, if the momentum continues, we might get a reaction there. But that's what I'm looking at right now. I'm going to try to give this one a little room. And see if I can get up to that 888 level. That looks pretty good. At that point, that's pretty significant resistance. You can see it back here. And if 888, by the way, is a target. The actual resistance, I should clarify, is at $9. And then you have this downtrend line resistance just above that, which if this level doesn't produce a reaction, then you'll most likely see a reaction off this downtrend line. But then longer term, if that downtrend line's taken out, that's good. So if you're a long-term investor or trader, you trail your stops up and you try to ride out the pullbacks, because there will be pullbacks along the way in just about any trade. And a couple more and we're done. EDXC, Index Corp. See the candlesticks. That's a thinly traded stock, and it's only 2.8 cents a share. So just here's a downtrend line. It's worth mentioning. I mean, it could certainly rip above that downtrend line, and these are potential targets here with probably that reaction high as the final target, maybe a little bit below. I think I'd probably look at that being the final target if you take that one. But again, higher risk in that one. Here's one that has more normalized looking candles and some volume coming in. You can see the traders like this one. They come in, you can see the volume there. Once it took out this downtrend line, very sharp move up, and I pointed this one out in the past and traded this one. Even have a position in this one. It's 33 was that former target at the time, and these are the targets now. That 19, these are actual resistance levels, so you set your sell limits a little bit below there if you're planning to take out there. So that's 19.87, call it almost 20 cents, and then 33 cents. And you can see, just taking eyeballing this chart, how well this is a big basing pattern for this stock. So if it can bust up above that 20 cent level with conviction, take that out. Whether or not we get a reaction there on the initial tag, which is very likely, that's usually where traders are going to step in. At least some will take profits. But either way, whether we have a pullback, consolidate, or breakout, and that would be ideal to see it consolidate and then a breakout, would help alleviate the near-term overbought conditions. But remember, these guys can get, overbought, can become much more overbought on these little guys here. Last couple times they became overbought, you can see the stock did pull back, but I've seen these things, crazy readings on the RSI up to 90 level and all that. So just point that out, that anything's possible, but that would be a very key target level there, that 33-cent level. And, if that's taken out, then maybe we continue higher to any of these. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoy.